In this video, I had a great interview with Mr. CK Ong, the Chief Operating Officer at SBI Digital Markets. SBI Digital Markets is a subsidiary of SBI Digital Holdings, a major financial conglomerate heavily involved in banking, asset management, and digital finance. SBI Digital Markets primarily focuses on institutional-grade digital asset solutions with a focus on areas like tokenization, digital securities, and blockchain-powered financial infrastructure. If you like this type of content, please like and subscribe as there is more to come. Thank you.
So maybe a quick intro about myself. Can call me CK. So I was actually from the traditional banking side for quite a while in operations, projects, risk, basically all the COO functions, but more tuned towards business rather than the actual back office. So my role has always been to set up businesses and processes and supporting the businesses. My interesting part of my career is that I was from Singapore, but I was working in Korea for 4 years. So I was based there for 4 years, and then after that I went to China for a year. And my plan was to go to Hong Kong, but in the end I took another role within the bank to come back to Singapore. And while I was in my last bank was UOB, is a local Singapore bank, United Overseas Bank. I went in to do risk, so they was actually grooming me to be the CRO. But 5 years ago, Singapore, there's 3 local banks in Singapore. Singapore is very small, so there's 3 Singapore banks. One of them, DBS, launched a digital exchange about 5-6 years ago. And when they launched the exchange, my UOB CEO saw the news, and he doesn't know what is it. So he asked one of the heads to find out what the hell is DBS doing. Is there something that UOB has missed out? So I got involved in the task force to look at this. And since then, I've been looking at it. And how we did it was that we decided to invest in a company and to learn through the company, because we think that UOB is not equipped to do it ourselves. And at that time, I reviewed all the exchanges in Singapore and the players in Singapore. At that time, it was a very early stage in Singapore. So even before Project Guardian, before MAS really look at it, so there are only a few early runners there. One of them is called ADDX. So they were one of the earlier ones, and we decided to invest in them, ADDX. And since then, for the 2.5 years after that, I've been working with ADDX on deals, on a strategy. So I put 2 corporate bonds and 2 funds onto ADDX. And I realized the issue we have when I was working in UOB. So I came up with a strategy for digital asset in UOB and started executing. And I found out the challenges of working in a traditional bank like that. And also, what is a company like a digital company needs from this traditional side. So I feel that there's a lot of things missing in between.
Yeah, exactly.
And through my review in all the companies, I realized that SBI is the name to watch out for. So to be honest, when I told my folks in the bank that I will not leave the bank. I don't think I will leave banking at that time. So I was like, if there's a company that I will join, it will be the SBI side. And I told them to watch out for that. And that was before SBI has all the licenses yet. So when SBI got the license and came approach me on the role, to me, it's a straightforward decision. I actually decide very fast, because for me, my decision is that if I strongly believe in this place, I should join the company, the fintech directly. If I stay in UOB, I think that I will go back to my traditional route. I don't think I will do much. I will be able to achieve a lot of value there. I will probably go back to my traditional route and be a happy old banker.
Yeah, it's interesting.
Yeah, so that's why I joined. Yeah. And because I have the experience in the tokenization area, a little bit in the bank. So in my area here, I came in as a COO to look at operations, risk, governance, also a bit of the marketing, but now I'm actually doing a lot of strategy and BD. So basically, me and the CEO are the one that is really in charge of the BD side, where we really go out and open up markets. And on my end, on the commercial side, we actually also segregate the work. I'm actually driving most of the, because a lot of the business in shops like us is still very traditional. Most of our revenue, unfortunately, still come from traditional business before it can go into tokenization. So the commercial team is really focusing on the traditional side. I am driving most of the initiatives that is on tokenized RWA, which is actually one of the main reasons why I came here. And since last year, middle about almost 1 year ago, 10 months ago, I've also trying to, one of my mission now is to try to bridge Web 2 and Web 3, which is why I'm very keen to work with Chainlink, because they are strong in the Web 3 already, and Web 2 we are strong in, so it's perfect. And and that's why I think you will appreciate that people like us from the Web 2 side, people from the Web 3 side, there's a big gap in the middle on how to bridge that. So for us, I think that we are in a very good organization as a licensed entity. We are in a very good position as an organization to do that bridging onto the Web3. So I'm driving a lot of that now. How to bring my products, our licensed financial products onto DeFi protocol, onto Web3 chains, I actually was exploring metaverse as well. I'm actually a big fan of metaverse.
Oh.
But it might be a bit too much for a lot of traditional people here to take. But that is what I actually want to drive. This year or end of last year, I got a lot of support suddenly, because everyone suddenly realized that's where the money is and the new capital is. So I got a lot of support, but I lack people to work with me, because after all, I'm still more of a Web 2 guy. I really need the experts like you to help out as well, and to build ecosystem, as well as to come up with solutions and the models of how to bring this product on. So I've been working a lot with the DeFi's protocols recently, and end of last year I spent about 2 months spending a lot of time with the DGens to really understand the DGen world. And I think that is a new journey that we are also setting up to try to bridge between the two. That we are working on. So I'm talking a lot about our strength. Actually, a lot of our strength is the tokenized RWA. I think we are one of the leaders in the industry, and our value is actually cross-border. We don't believe that we want to set up our shops in every country ourselves, because especially in Asia, we think that every country is too complicated and too local, that you can't just set up shop. You need 20, 30 years to build a company with the brand, the trust, and the customer base. So our vision is always to work with partners to do that, and we choose our partners very carefully. That's why the people we work with are the big names, as well as the people who also need to be ready to really put effort into tokenization. And we work very closely with regulators as well, to bring products out each other. And one exciting initiative we are working is called a Global Buy-Side Alliance. This is actually one of the biggest things that we are putting effort in since last year. We are going to connect all the venues globally. We have about 8 countries now, and we are going to grow to 15 countries this year, where we bring all the venues. It could be a primary distribution venue, it could be a crypto venue, it could be a digital exchange. We are making a marketplace of venue where we come out with the templates to be able to lower the cost of entry to join this ecosystem, and to really bridge across to every single venue products. We have been doing this one by one, but we are now consolidating this together. And in the middle of this, it's not just us. I'm getting a group of very strong names in to build the templates, tech, operations, legal, and also the governance template in. And Chainlink is one of the person I'm talking to on that. That will fill the gap of cross-chain, right? So I'm building that out with all the good names in to show the reputation and also to lower. I feel that to consolidate an ecosystem, a lot of the issue is cost and time. So we want to lower the cost, lower the time for the connection, and to show the value there. And this is going to be, and it's supported by quite a lot of regulators as well. So it's going to be, I believe it's going to be the largest. No, I'm sure currently it is at this moment, but I believe it will be the largest tokenized RWA ecosystem. What is lacking is actually the crypto platforms, the Web3 platforms, and the crypto exchanges. I haven't incorporated that in because a lot of the tokenized RWA couldn't be traded on the crypto platforms yet because of the regulation. Because a lot of things we created are mostly securities format. So there is this is a very interesting project that we are doing, and we are. The other thing that about ourselves is that we are very commercial. So we look at commercial and partnership as the first thing to do. We don't do a lot of POC and tests. We actually don't have enough resource to put a lot of time in that. We actually want to go straight to commercial and really work on commercialization. But we don't publicize a lot of our commercial deals because a lot of our investors, first of all, a lot of client base are very high net worth individuals. So they want the privacy. So we don't publicize a lot. And second reason is that we don't think there's a need to publicize because we want the business to speak for itself. We feel that if we do a lot of publications ourselves, publicity ourselves on all these deals that we are doing, then it doesn't necessarily show to the industry that we are ready to commercialize. It probably show that we are still at the idealization stage. And secondly, we think that once we have the business case, people in the industry will naturally know who we are and what we are doing. So that's why the publicity for us is not that great. For example, we did the first of a kind deal in Thailand in December. And we were debating to publicize that because it's quite huge, but then we didn't want to because we think that we should stay true to what our marketing strategy. And secondly, we don't want people to come in because a lot of things we do take a lot of time to break into a market. We don't want competitors to all come in and steal the market share. So we have to keep that to ourselves as much as possible. So that is what SBI DM is about. Yeah.
I love it. Yeah, you mentioned that that you want to bridge that gap, or that there is this gap between, let's say, TradFi and DeFi. It's funny because Sergey Nazarov, the co-founder of Chainlink, recently mentioned as well that TradFi will be the largest customer of DeFi, or they will be each other's biggest customers. And I love that the things that you're doing with SBI, and it's super. When I hear you talk, it's super exciting to see what's gonna come. I have some questions regarding Project Guardian to start with, to give some context for the people watching. So SBI Digital Markets is, of course, one of the partners in the Monetary Authority of Singapore's Project Guardian, alongside other major players like Chainlink, UBS Asset Management, and Swift. And this pilot is a global cooperation between policymakers and key industry players to enhance liquidity and efficiency of financial markets through to asset tokenization. And one of the goals is, for example, to create a digital subscription and redemption system for tokenized funds, right? So a first question I have for you is if you can walk us through the SBI Digital Markets role in Project Guardian, and what kind of differentiates it from or what kind of differentiates this initiative from other tokenization projects globally?
Oh, so for Project Guardian, as a background, Project Guardian started in 2022, and we are the first one to be there. Of course, with some other partner. The first one was actually we are the only use case in the first one. We did a cross border liquidity pool of FX. with JP Morgan and also with DBS. So we did that out of our Japan office. So that is the first series of Project Guardian. The second year in 2023, we participated in two projects. One is that together with UBS and DBS, we did the world first repo of a native digital bond issued out of Switzerland, bought in Singapore, and then repo into Japan. So first cross-border as well, over 3 countries, and also settled with a stable coin. So there's a lot of first in that. So we did that project out of our Japan office. And then the second project we did in that year was actually a technical pilot with UBS Asset Management, where our role at that time was to be the distributor and the custodian of the fund, tokenized fund that UBS has curated. Then in 2024, last year, for this tokenized fund project, we take it a step further by not only putting the registry on chain, but together with Chainlink, we actually create a digital transfer agent smart contract, where subscription and redemption can be done on the smart contract itself for the tokenized fund. So in this case, our role is for last year was we have 3 roles. One similar to the year before. We are the official distributor of the tokenized fund from UBS. We are also the digital custodian of the fund. And then the third role is the transfer agent together with Chainlink, where we put the process on chain and to show the efficiencies of that to the investors in the end.
This pilot, it leverages also existing I guess Swift infrastructure for off-chain cash settlements.
Yes, for off-chain settlement, because in the end, at this moment, the actual subscription to the fund admin is still in the fiat format.
Okay.
Because how UBS does is that they create a feeder vehicle on the tokenized fund, which fit into the master traditional fund, and because of that, the subscription and redemption still need to be fiat to the fund admin. And yes, of course, that will be the traditional payment method through Swift.
It's very interesting to see this convergence again between these traditional markets and these new Web3 markets. Some in the Web3 community argue that partnering with traditional financial institutions like Swift or I guess in a way SBI Digital Markets is like a modern online streaming platform partnering with a blockbuster store. How do you respond to this perspective, and how do you believe collaboration with legacy systems is like the right approach for tokenization?
I think that's a good point. I think 1 to 3 years ago, that is true. That there's too much of a gap between traditional institutions and the Web3 institutions or the ecosystem to coexist and to collaborate. But now I think the industry has grown quite a lot, both sides. On the crypto ecosystem, on the Web3 ecosystem, a lot of the institutions and the investors in the Web3 platforms and protocols are actually very sophisticated now. And they are actually looking for products from the traditional ecosystem. And a lot of traditional ecosystems are ready now to integrate into the Web3 protocols, which is why in the beginning, in my introduction, I was saying that is actually one of the things that SBI Digital Markets want to play. Because while we are a traditional licensed entity, however, we are set up as a digital market solution, right? So we actually are in the best place to do that bridging between the fully traditional business to the digital ecosystem. And how I think there's a few areas that needs to be touched on to bridge that gap. I think technology, there's enough solutions there. Solutions like Chainlink will be able to cross any protocols and chain easily. So I think technology solutions are ready already. What is lacking is first products. Not everything can be at this moment. At this stage, not all products on the traditional ecosystem suits well with the Web3 ecosystem. So I'm actually curating a list of products that can sit in both ecosystem, and it's very clear that not every single product works for both in terms of demand, in terms of suitability, in terms of regulations, right? And the second thing, more important thing outside product is the legal and regulatory angle. To be able to work with your traditional ecosystem, to be able to get products from traditional ecosystem, there's a lot of regulatory requirements and legal requirements needed. So one of the big hurdle, I think, is onboarding. So to be able to work with that, the DeFi and the Web3 ecosystem will need to ensure that they are ready to adhere to the standards of the traditional ecosystem. And that is, I think, a big challenge because that is not common, and it might be a bit more rigorous than what this ecosystem is used to. So that is one of the areas that needs to look at. And the traditional ecosystem institutions also have to be ready to bridge that, right? By reinventing their processes, reinventing their documentation, reinventing their internal requirements to be able to pass these products over to the crypto ecosystem. Just a very good example, right? A lot of the times, there's a lot of protection, disclosures, clauses in a legal documentation of a financial product traditionally. Some of that is because of requirements legally or rather on the regulatory side. But a lot of them is actually a matter of risk appetite of the institution, right? To protect the investors and to match their risk appetite of the institution. To bridge that, the traditional institutions will need to understand this ecosystem, this client pool well. They are not wholesale, they are not institutions, they are not corporates, they are also not retail. They are actually another class of investor pool that needs to be redefined, or rather need to be defined, and then come up with the correct protections as well as the risk level for this group of clients. And that, I think, that is not the work that every institution has looked at. At this stage, I think it's still a bit nascent. What a lot of the traditional institutions is looking at is not to revamp a whole new processes for this group of investors. What they have been doing is to try to tweak some of their requirements to be able to adopt to that, and that is not scalable, right? So it's still a project base, it's still one product base, but that is where some of the leaders in the traditional sites are trying to push forward to, including us. We are trying to bridge the gap.
I was gonna ask that if there are any key milestones that need to be achieved before we see any full-scale live operations of tokenized funds, subscriptions, and redemptions, or in general tokenization. Because you did mention that you need to keep regulations and all other things that you just mentioned in mind. And I guess a second follow-up question: what's the timeline you envision for this to be deployed on large scale, real world?
So in last year Project Guardian, or rather in last year Singapore FinTech Festival, we have a few roundtables with all the participants. A lot of and I put in my LinkedIn some of my observation end of last year. One of them is that asset managers as well as banks, institutions, issuers have done enough POC. It's very clear in the industry that all the required POCs have been done, and on the banks as well as the asset managers, the last 3 years. So last year is very clear that all the testing has been done. What is lacking is the adoption, where the products can move in the tokenized form. I strongly believe that no investor will wake up one day and then suddenly demand for a tokenized assets, right? If they have done something traditional before, they wouldn't wake up one day and suddenly want to take a tokenized form. There is a learning process. There is an industry adoption process that needs to be done, and that doesn't come automatically. because we are creating a new market. We are creating a new way of creating products and distributing products and allowing access to products. Is when you create something, it doesn't come automatically as an evolve suddenly, right? So the industry has to come in and put the effort in to create this new market and create the solutions. So in terms of timeline, I think that it's up to the industry players, and that's why players like SBI Digital Markets, in this case, our role is really to try to shape out the industry. And earlier I mentioned that we are having the initiative to connect all the venues globally together. One of the reasons is because we feel that every single venue, every single jurisdiction, the adoption rate is still slow for tokenized RWA especially. And because it's low, there's not enough liquidity. And because there's not enough liquidity, investors will not have the trust that this can replicate or replace the traditional world. So it is a chicken and egg situation. And how we want to solve it is that not only by bringing use case in, but really by connecting all the liquidity pool together and to show the industry and show the world that there is enough liquidity, but everyone needs to put in extra effort to increase the adoption rate, to talk to clients. And this is the perfect time in the industry to do that, right? With crypto getting very recognized now, at least Bitcoin, Ethereum are getting very recognized institutionally. And then all the testing, all the POCs have been done over the last 5 years. This is the perfect time to do the bridging. So in terms of timeline, I believe the mainstream adoption will happen within 3 years. In these 3 years, all the players in the industry has to put in their work together, and you can see that it's a very collaborative environment now, that all the motivated players are willing to work with each other to form the ecosystem. And hopefully our ecosystem can be one of the bigger ecosystems that everyone can, who are interested, can help to join together to create the industry movement this year. So I think that the adoption, the turning point is this year. This year is a turning point where a lot of the use cases will be able to bridge across. And next year onwards, I think the commercialization will be proven.
It will probably take some time, especially keeping regulatory environments and governments as well in mind. We know that, for example, now in America, there's been a shift in how the government looks at crypto or looks at blockchain. In Europe, they're a bit hesitant, I guess, more in the negative side. How is Asia in that regard?
In Europe, I'm actually Ton. I think Mika is a good good thing to start with. Of course, there's different interpretation of that, but I always believe having a regulation is better than having no regulation, right? At least you have the boundary set. You can move on from there and be flexible about that. It's better than be unknown. So to me, I'm a bit positive, but let's see how that goes. Europe is such a big market. With that as a first step, I think for Europe, the next step is to see how flexible and how commercial the regulators are. For Asia itself, it's quite different from Europe. It's quite different from US. US, of course, is the early starter, and the market is big enough for them, right, themselves. Europe as well is big. The regulations are very standardized. Asia have a different big of challenges, both in the traditional world as well as in the digital asset world. Regulations, culture are very, very localized in every single country for very good reason, because every country in Asia is very standalone, have very unique objectives, they have unique environment and unique consideration for each country. So Asia is always at a step that regulations come locally, and then group of countries will look to try to standardize it. Traditionally, it happened, and on the digital asset regulations, on the tokenized securities regulations, is happening that way. There's a few countries in Asia, of course, having the regulations a bit earlier, right? Places like Singapore, Hong Kong, Thailand, all these countries have the regulations earlier. There's also countries that have regulations, but they are not, they are still quite close within the country, and the government really don't really publicize globally that much. Places like Indonesia, places like Malaysia, places like Philippines, they have actually regulations on the crypto side, and some of them even on the security side, but it's a bit less well known because they are not involved in a lot of the big global projects and publicity. I think that it will continue that way, and we in SBI Digital Markets, we have been working as part of our global distribution network. We've been working closely with a lot of the regulators to really understand, as well as to share some of the industry knowledge as well as experiences to see how we can help to influence the industry perception onto regulation to make it more commercial. And a lot of and over the last 1 to 2 years, I can see that most of the Asian regulators are very open and are very aware of what's happening out there in the world. It's not that they don't know and suddenly want to look at the regulation. They have been in the space for a long time and looking at it. A lot of them are just waiting to see what is the best for their country. And we hope that by bringing the correct use cases, by working with the correct partners, trusted partners, also trusted by the regulators, we can do that bridging to move regulations and adoptions in a way that is in a more standardized format. So I could see some consolidation of standardization of regulation. And in my mind, which I also mentioned in my end of year LinkedIn summary, I think that regulations will be standardized, but not in a global standard way. There will be a few standards to follow. US, of course, is one. Europe, now we know, is one. In Asia, there will be probably 1 or 2 groups of standards that could possibly be significant enough to be in the discussion with the global standards. And we can see that in Project Guardian, a lot of the global institutions have now come in to try to do the standardization at the association level as well. So I think that standardization for Asia is coming through over the next couple of years, and we are right in the midst of that to work together with the regulators.
There's one thing in that same end of year LinkedIn post that you mentioned. You also said that banks might shift focus from tokenization to payments this year. How do you see this impacting the broader adoption of RWA?
Good. That's my personal view. Of course, not all the banks, but I do see a trend, 2 trends, right? I think I mentioned. One is the focus of resources on the payments, and one is the focus, pushing resources to other innovations like AIs. And the reason is because the use case for these are very, very clear, and the benefits of that can be seen easily. And I will blame it that our industry we have not done enough to show the use cases, the values to the institutions and to the investors if in the event that a company deprioritize blockchain and digital assets, is the industry to blame that we have not really shown that to this institution. But I think that is very practical because after all, if you look at why blockchain exists in the first place, right? Why Bitcoin exists, right? It's actually for payments, right? It's actually a currency. So naturally, the best use case for blockchain, even until now, is payments, right? It's the cleanest and easiest to see use case, and that's where investors can also see the benefits the most because atomic settlement proves to be one of the big benefits as well on all our use cases, right? And that's why all the stable coins and CBDC use cases are getting a lot of traction. So when I say that it moves to payments, a lot of it also is related to digital asset and blockchain, right? In terms of crypto payments and atomic settlement. AI, and you can see that now there's a lot of efforts to bridge AI and blockchain as well. So I think that innovation and technology is correlated, right? Across a history, you can see all the technology ideas, innovations somehow seem to integrate nicely in the future. So I think that will be what happens. So it's not a negative thing when I say that it moves into payments. It's probably show that use cases there, and then maybe that use cases on the payment side will prove to be something that can kickstart the investors to think about tokenized RWA on another angle, that it can help them in terms of payments, in terms of managing their funds, in terms of atomic settlement, that will be able to be a good value to bring investors. So I say that with a tinge of positivity for the industry. Yeah.
It's definitely a super exciting times. And another going off topic here from tokenization, another super intriguing thing I saw on your LinkedIn is that you recently asked if the rise of Bitcoin ETFs is a step forward for crypto recognition, but a step backward for token and wallet adoption. What would your personal take be on this?
Okay, so it's personal as well. It's not
Yeah, of
it's
course.
also my personal view. So for the longest time, we have been looking at tokenized RWA as using tokens to wrap around a traditional asset. And to showcase that why using this token to wrap around traditional assets, by holding a token in the wallet that represent your assets, this can open up a whole new industry for you. However, I feel that ETF is the opposite of that. You are using a traditional wrapper to wrap around a token, right? And for me, that changes our thinking when we talk to customers. In the past, we always tell, we always try to work with customers on education that the first step to enjoy the benefits of tokenized RWA is to have the token put into your wallet, right? And that can explore, atomic settlement, the cross-border liquidity. There's a lot of lesser documentations and stuff like that, operational efficiencies. And now we have to rethink that, right? Because investors will be able to access tokens by a traditional format. So I feel that when that happens last year, I actually was torn between my messaging to the customers, because now it's very clearly shown that they can participate in this world without holding a token. I think what we have seen is that traditionally, right, a lot of the institutions will be more ready to take tokenized securities than crypto directly. And the reason is because, the underlying asset of a tokenized RWA is something they're familiar with. Once they hold a token, they may be open to invest directly into Bitcoins.
Yeah.
However, now they skip the step of tokenized RWA. They are able to access the benefits of crypto without holding a token. And to me, it actually pushed the tokenized RWA agenda a bit backwards. However, on the other hand, by promoting, and by institutions accepting the nature of digital asset, that's a good thing for the industry. And after all, it's still all on the blockchain. So it opens another angle as well, positively, that we can go to customers. They are ready to talk about Bitcoin. They are ready to talk about digital asset. But however, they might not be willing to take tokens. However, they could take it in an ETF format. They could take it in a fund format, a security format. I'm still torn between the two, because ultimately I think a lot of the use case by holding the token itself rather than holding a traditional security or fund is very different. Ultimately, the efficiencies, the benefits of the tokens are still not being utilized fully by doing this format. But I think that is a good step in the industry overall. At least the acceptance is there, and they can understand crypto better. And hopefully in the future, they would be willing to do directly rather than through a wrapper.
Yeah.
And I think that is just a step in the journey that we need to work on. Yeah.
Yeah, and Web3, which was always meant to be an alternative for traditional systems, actually needs traditional systems to be adopted. In a way, it ties into DeFi and TradFi being each other's biggest clients, and to some things that you mentioned before about them working together and not. It's a
True. I
topic of
think
discussion.
yes, I think it's part of a journey as well, right? So as any evolution, there will be a stage where it will just be a mixture between the old and new. So I think this is a mixture. This is that stage now, and towards the future, right? And all of us can imagine a future that is run totally by tokens, right? Be it in the crypto, be it the tokenized
Yeah.
assets classes.
A final question for you. when you're currently looking at the state of digital assets and Web3 in general, what makes you the most excited going forward this year or the coming years?
What makes me excited is that I have a direct role to play in our organization, and our organization has such a is in the midst of this revolution, right? So I think that the most exciting thing is that the things that we put on the use cases we put in the industry are all new, are all first of the kind in the country, in the industry. This makes us very excited because we can work on processes that we don't want to have traditionally. We can work on new processes, but coming from the traditional Web2 world, we have that governance mindset as well. So we are trying to, I think it's a good stage where we are in these few years, that we are creating what needs to be created in the future, and we could have a say in it. So I'm very excited that I'm part of the whole puzzle, of the future.
You're at the forefront, the front lines, shaping it in real time. I love that. All right, Mr. Chong, thank you so much for taking the time to meet with me. Yeah, I love the things you said, and I'm very excited to see what SBI Digital Markets will do in this year and all the years ahead.
Yeah, thank you, and we are very close to Chainlink. So we definitely will keep in touch with you. And hopefully get some insights from you as well on how we are working on, and whether how to bridge both worlds. Yeah.
Awesome, let's do that. Thank you so much.